Hey guys, Antoine Martel here, and when it comes to real estate investing, there's a lot of fears associated with investing in real estate, and especially investing out of state. There's a lot of fears that people have in terms of contractors, never visiting the property, how am I going to get screwed over, people are going to steal money from me, and I'm going to address every single fear that you may have about investing in real estate so that you can go and buy your first rental property. But before we get into it, please like and subscribe to my channel because I'm going to keep sharing with you my tips and tricks to get over the fears, get over the humps that come along the road when you're trying to invest in real estate. You may be worried that investing in real estate out of state is way too difficult, but believe me, it's not, and you can do it. So when I first started, I had the same exact fears that you probably do when it comes to investing in real estate across the country. But now I've gotten over those fears and I'm buying almost a house every single day in multiple states across the country. And I'm gonna help walk you through the entire process. So when people come up to me and tell me that they're scared to invest in real estate or scared to buy houses out of state, the first fear that most people have is that they're never going to be able to see the property, or they're not going to be able to go and visit the property or see the property before they buy it. They're making these huge purchases. They're putting $20,000 or $30,000 down to buy these rental properties, and they're never going to even be able to see those properties. But my question to you is, why do you need to go and see that property? Why do you need to go and visit it? What value are you going to provide by walking through that property? And that's the biggest mindset change that you need to undergo. You have to realize that by you going and physically walking the property, what value is that going to provide? Instead of just making you feel good that now you see the property that you're buying and you get to walk through it and know the layout and understand the layout, other than that, what other value are you going to provide to the property? Because when you're buying these properties out of state, you're going to have an inspector walk through it, your property manager, you're going to have an appraiser walk through the property, have all these people, professionals, walking through the property for you. If you're not in construction or you're not an inspector or you're not the property manager or the realtor involved, you're going to have one of those parties do that job for you. Especially in this day and age with all the technology that we have, you can get photos and videos, and they even have this new thing called Matterport, which is a complete 3D model of the entire property that you can pay an extra $500 or $700 to get. So why do you need to be there? You have all these people on the ground, you have all this content that's going to come back to you about the property you're buying. Hire the right inspector, hire the right property manager, have them walk it for you, collect their thoughts because they're the experts. Look at the photos, videos, the Matterport if you need that, and then make your decision based on that information. And by using this technology and by building the right team on the ground, you're now able to walk 10, 20, 30 houses every single day. Even today, for example, while I'm filming this YouTube video, I have people walking houses across the country for me. So by me just sitting here making this content for you guys, I am physically walking 5 to 10 houses today. And this brings me to the next biggest point, which is building a team. So this team that you build on the ground is going to be your eyes, ears, and boots on the ground. So you need to make sure that they're really good, they have a ton of experience, because they're going to be the ones that you're going to hire to go and walk all these properties for you. So starting with the most important person on your team is going to be the property management company that you hire to manage these properties. So typically when you're buying rental properties, you want to have the property management company involved from start to finish. So let's say you put a house under contract, you want the property manager to go and walk that property so they can figure out what they think that property will rent out for. They may also be able to make some recommendations about the property so that that property can rent out easier and quicker, and you can even get higher rent. The property manager that you want to hire is going to be a wealth of information and knowledge, and hopefully they grew up or know the city like the back of their hand. So whenever you make an offer on a property, they're going to know the street, they're going to know the neighborhood, the going rents are in the neighborhood. They may even manage the house next door or across the street. So they're going to have a ton of data that is not public data. That's why the property management company is going to be the number one most important person on your team. So once you get somebody that you trust on the ground as a property manager, just use them as much as you can, build that relationship with them, try to do deals at scale with them, and try to stay loyal. I think a lot of new investors try to go to a new market and work with 3 or 7 property management companies. That doesn't really work out in the long run. I would more focus on one property management company, fully vet them, use them to the full capacity, and then if they don't work out, then move fully to another property management company. The real estate world is a very small world, and they'll figure out what you're doing and that you're working with other competitors. Most people don't like that. Another very important person on your team when you're buying rental properties across the country is going to be the inspector. And now the way that I found most of my property inspectors is not by going on Google or doing research or looking them up online. It's actually just been more referrals from my realtor or from the property management company. Now, when it comes to the inspector, you're going to want to hire them to go and walk the property while you're under contract, and they're going to give you a very, very detailed report about your property. And you can kind of go through that with your property manager and your realtor to see if there's some things that you should renovate or replace immediately, and maybe some things you just want to keep an eye out for later on. Another great thing about the inspection report is you can take this to the seller of the property or the seller's agent and use it as leverage. So you can go to the seller's agent and tell them that you found moisture in the basement or that the HVAC is too old. And you can go to the seller of the property and negotiate a reduction in the purchase price. One of the fears that you may have about buying a property is, what if something's wrong with the property that I don't know about? Well, that's why you hire an inspector to go walk the property for you and to make a 50-page report about the property you're buying. Most of the inspectors that we work with pay very close attention to detail. So they'll even put stuff on the report that probably shouldn't even be on there, that nobody really cares about. And maybe if you live in a rental property or you own your own home right now, stuff that you probably live day to day with that you don't even notice, the inspectors will even put those items on the report. So it's very, very detailed, to a point sometimes where the sellers get very pissed off with the inspection reports because they have too much detail. So one of the biggest fears that comes with buying properties across the country, especially in new cities that you've probably never been to before and you don't know what the properties are worth, this is where the realtor comes in. The realtor is going to make sure that you're getting a good deal, you're buying it for the right price, and you're not overpaying. And they hopefully will know the area like the back of their hand as well. Now, they're a little bit different from the property manager because the property manager is going to provide you some insights about the rents and market rents and what they think they can get for rent. The realtor is going to more help you with property values, making the right offers, and negotiating for you to get the best deal. One of the best ways that I've found to find a great realtor is to, again, go to the property management company and use them as your hub. So go talk to the property manager, ask them if they have any realtors on their staff. Sometimes property managers have a broker division, so they have realtors that actually are on staff, are on payroll. If they don't, then just ask them if they have any recommendations to realtors that they like working with. The other great thing about realtors is they may have access to off-market deals that are not posted on the MLS yet. So it's great if you can build a relationship with these realtors and you're trying to go and buy, tons of houses over the next few years. They can be a great source for deals. Another fear that people have when they're buying rental properties across the country is that they think they are going to overpay for a property, or they'll buy a house for $150,000 when it's only worth $100,000, and they're just some out-of-state investor that's getting screwed by the boots on the ground. And while I completely understand the fear, because I'm always scared of overpaying for properties, it's completely irrational, and I'll tell you why. So when you're buying these rental properties across the country, you're hopefully going to be getting bank financing. And what the banks do is they always try to protect their money. The banks are going to fund 80% of your deal and you're going to put 20% down. The bank is going to send out a third-party appraiser to verify that the house is worth what you're buying it for. So you're completely protected. The bank even has more money in this rental property than you do. The bank's going to send out an appraiser on your $150,000 property, and let's say the appraisal comes back at $100,000, the bank is only going to lend you 80% of the $100,000. So they're only going to lend you $80,000 on your $150,000 purchase. Now, this is an amazing point of leverage for you as the buyer. If the house does not appraise, what I normally do is take the appraisal report, give it to the seller's agent, and the seller and the seller's agent will typically drop the price down to the appraised value. If they don't want to drop the price down to the appraised value, then just walk away from the deal and go find the next one. You never should be paying for a property over its appraised value. You really should only be buying these rental properties for what their appraised value is, or less than that. So make sure when you're buying these properties across the country that you're always getting bank financing, because that adds another person on your team, which is the appraiser. Another fear that people have when investing in rental properties across the country is that if they buy a house and it needs some work on it, like a new roof or a new HVAC, they're going to hire a contractor, and that contractor is just going to run away with their money. Now, while this could happen, I've spent millions and millions and millions of dollars of renovations across multiple states, multiple cities within those states, and nobody has ever stolen money from me. I think the main reason why nobody's ever stolen money from me is because all the contractors that I have ever hired have been through personal referrals. So let me repeat that. I have never gone on Google and looked up a contractor, looked up an HVAC company or hot water tank company, and just hired them to go out to the property and do the repairs and paid them directly. That has never happened. And I think that by doing this method, by going through the property manager or going through the realtor to get to the contractor, is probably one of the best approaches that you can do to go and hire somebody to do work on one of your properties. Now, there is still a little bit of risk when working with a brand new team on your first house. So what I would recommend doing on your first property that you ever buy is doing a very, very light renovation. Test out the team with a small little project and then slowly scale up from there. Another thing that we do and that you should do as well when you're paying these contractors, even if you're doing a $5,000 job, is don't pay all the money up front. So typically for a $5,000 renovation, they're going to ask for half of the money up front. So give them $2,500 and then you'll pay the rest of the $2,500 when the work is completely done and you have photos back from your property manager or your realtor to confirm the work is done. Another fear that people have is they think they may be buying properties in the wrong neighborhood or on the wrong side of the train tracks. And I completely understand this fear because there are some markets that are very block by block. What that means is that you go into a certain zip code and one street's good, one street's horrible, the other street's great. So it can be very hard from an out-of-state investor if you live in California and you're trying to invest in Memphis, Tennessee, for example, to know all the neighborhoods and all the intricacies that come with those neighborhoods. The main way to guarantee that you're not going to be buying these properties in rougher neighborhoods is to bring in a great property management company that doesn't want to manage houses in those neighborhoods. So let's say, for example, you're interested in buying a house on a certain street, you send that address to your property management company, and you ask the property management company what they think about the neighborhood, what do they think about the street, and do they like to manage properties there? If you find a great property management company, they're going to steer you clear of those rougher neighborhoods and away from the areas where it's hard to collect rent. Trust me, the property management company wants you to buy rental properties. They want you to buy a ton of them. The property management companies make money based on what the tenants pay in rent. So if a tenant doesn't pay any rent that month, because it's in a rougher part of town or because the rents are very, very low, then the property management company is not even making any money and it just becomes a headache. Another fear that you may have when investing in real estate is that I'm going to buy this house, it's going to be vacant, and it's going to be vacant forever. Now, this is completely irrational, especially in the day and age that we're in 2022, when houses are renting out in a weekend and we're getting 40 applicants in one weekend on one of our single family houses. So personally, what I would do before buying a property is, again, loop in your property manager. Ask them what they think the property can rent out for. Ask them if they are renting out any similar properties in the neighborhood and what the rents are there. And then also ask them how long that they think the house will sit on the market before they're able to rent it out. Another great tool that you can use to double check the property management company is a tool called rentometer.com. So what my team and I always do is take the address of the property, put it in Rentometer, and see what the median rent is in the neighborhood. Then ask your property manager what they think that property can rent out for. And let's say Rentometer shows $1,200 and the realtor or property manager says $1,200 as well, then that's a pretty good sign. But if Rentometer says $1,200 and the property manager is saying $2,100, then that may be a red flag and they may be shooting for the moon. I always like to rent out my properties for around the median rent. It just helps out with getting a tenant in there quickly and easily instead of trying to get $1,000 more per month and having the property sit there for months and months and months. So when you're running the numbers, put $1,200 a month, look at the return. Is that a great return? Okay, what if I have to reduce it to $1,150? Am I still happy with the return that that property will produce? So don't be worried that your property is never, ever, ever going to rent out. Your property will rent out. It's just having the right timing, the right seasonality sometimes, and also the right rent amount to get that property rented out. But trust me, no matter what, your property will rent out. It just depends on how long it's going to take to get the right renter in there. So hopefully this video helped address your fears about going out there and buying an investment property out of state. But if you do have any additional fears, feel free to leave them down in the comments below. But before you go, please like and subscribe to my channel so that I can help you guys invest in your first real estate property out of state. And I'm going to be dropping new videos every single week on this YouTube channel. Thank you, and I'll see you on the next one.